Hi everyone, welcome to our coffee chat.
Die korte termijn.
I'm Perlan de Graffi. I'm your host for these sessions. And our goal here is to have a space where we can meet once a month to discuss about payment industry, to hear from our colleagues and have a moment to learn together, right? So today, Lau, if you can go to just the cover. Go back, sorry. Yeah. So today we'll be talking about our first mega trend, which is B2B payments. And well, if you're not here last month, let me briefly explain how this works. So here at PCMI, we believe we have some big trends that will be shaping the industry throughout the year. And we actually hosted a few webinars about this recently. But in the coffee chat, we're going to dive deeper, right? So we'll have a discussion about each megatrend throughout the year. In the way that we are doing this is that we'll always have someone from our side, from PCMI side, which you will give some context, talk about what the data is telling us. And we'll also have some guest speaker to help us ground the discussion and also share what they're seeing in practice, okay? So moving forward, we, as always, have our legal notice here and a few guidelines to ensure a successful meeting. Open your camera if you can. We would love to see you. Also, feel free to ask questions, participate, make comments. We truly encourage you to join us in the discussion. And also keep in mind that we publish this material. So if you want to access the content later, or you want to have the contact of our guest speaker, all of this material is published in our website and you can check there, okay? So without further ado, these are our guest speakers for today. From PCMI side, we have Marina Gil, which will introduce herself in a while. And our guest speaker for today is Inácio Beraldi, which is the co-founder and CEO of Rexy. And Rexy is an AI native infrastructure platform that automates financial reconciliation for banks, fintechs, and financial institutions. And Inácio will also be talking shortly. So Ma, I'll hand her over to you so you can start it.
Of course. Thank you, Fer. Hello, everybody. Nice to see you all here. So as Fernanda mentioned, we are starting with one of our mega trends, which is the B2B payment modernization and strategization. So let's start that. And the idea is for me to just bring this content back, but very briefly, because our intention is to open the conversation and also provide enough timing for Ignacio to really present and bring his view and perspective on the market about this modernization of B2B payments. Okay. So let's start. Lautaro, in the other slide. The idea here is just to really bring the shift in this payments, right? From cash and checks like paper to real digital payments. And we brought here US that representing the mega trends from US because it's really interesting when you see this market. There is a high usage to have a high share of checks, right? That is not common to the other markets, but it's common for US. And if you see back in 2029 to 2019, 50% of the payments were cash and checks. And now by 2024, it dropped considerably to 32%, meaning that even a market that has this legacy of checks is going to this modernization. And here the really interesting pattern that we see is like the volume went mostly to ACH, not cards or real-time payments, which means like an electronic payment method, not really full digitization, but it's the start of the process, right? The start of this digitization path that we see unfolding to B2Bs. Right, and connecting to that and bringing a bit to Latin America. In the next slide that we like to present is like how this is complex for the merchants, for the corporates in terms of modernization, because we normally talk about consumers requiring different payment methods and different alternatives for pay, but this brings a huge complexity for B2Bs that need to digitize and to become modernize the way they accept payments, right? So here's just a funny story, represent that full in the webinar. But here's like, for example, a merchant that wants to come to the region and wants to scale in other markets to the region, right? How complex is that? So they can say, okay, I know Stripe, there's a global player, but they're not available in all the markets. And then okay, other global player, PayPal, but it's expensive. And then, okay, let's go to specific payment methods. OXXO in Mexico, for example, Pix in Brazil, but it's hard. It only works in specific markets, right? Okay, so let's try to access banking systems, even more fragmented in the region and even in the markets. Okay, we have PSPs that support that, like e-banks, the local, but it's expensive and you lost a bit of control. So the idea is to show like it's hard to modernize and it's hard to offer different payment methods it's complex in Latin America specifically as well, because you don't have a unique solution, right? You have to choose what makes sense to your company. There's not right or wrong. It's just showing how hard it is, right? And connecting to this complexity and the need of modernization. If you go to the other slide, we have the transactions decline that we mentioned, but the idea is just to show that the need to support, right? And the acceptance side is where it all begins for the B2B payments, right? And that's where begin the modernization and the need to support. And this is where we see the rise of the orchestrators, right? There are payment providers that on top of what aggregators use it to offer, which is like a central gateway for payment, to centralize all the PSPs, the gateways, the payment methods, all in one platform, they also bring additional values that is needed in this modernization, such as fraud control, reconciliation, automatization, also allowing merchants and corporates to offer different payment methods faster, right? So this is how the orchestrator is tackling this first part of the chain, which is the acceptance, the payment acceptance. But in the next slide, I want to show like visually the full B2B payment value chain, right? How it goes. And we see, if you can go back, Lau, to the other slide, the 10. Okay, cool. So here's everything that happens in the payment, the B2B payments, right? So the first part that is being sold, right, by the orchestrator, which is the acceptance. It's like you, merchant, accepting the payment, capturing the revenue, and then you approve it, you route it, and then you receive the funds. But then is where the other party starts, is when you reconcile the payment. You have the data to reflect that payment you collected, right? You accept it. And once you have this data, you can then start the other part with the payment side, right? And then you have your invoice is coming and you have to pay it, you have to clear and settle this process, and then you can access the cash management, the treasury management, access funds like capital and all that. So here to show like orchestrator is tackling this first part, the acceptance, but we still have room and lots of needs and opportunities for providers in terms of the other part, the cash management, the disbursement, the working capital access, right? And this is to the next slide now, just seeing this next part that is really connected to what we are saying, becoming digital, modernizing, because B2Bs really need this digital path to be able to access all this payment side with more efficiency, right? And this is what Rexy and Ignacio will tell in a moment. But basically, in order to start this, you really need data. You need clear data, we need automated data, and you have all this reconciliation complexity because you need to be able to see the data reflecting all, so then the treasurers can do their roles efficiently and working on treasury and cash management and all this stuff, right? And this is where we see still the need for the digitization, the real-time data, the conciliation at real time, so the treasurer do not lose time and can really do their job in a strategic way, which is another interesting pattern that we see in the other slide, just to some data to confirm this trend of the treasurers, right? Seeing the treasurers change, rolling and evolving. Now to the other slide, we have some interesting data showing that there is, for example, before it was purely cash management, but now the treasurers need to expand their functions and go to strategic discussions, like more than 50% of the treasurers are invited to C-suite level meetings and discussions about transformation, for example, or expansion and the overall performance of the company. Also, the risk management is something that is also at their heads as of now, right? Their KPIs expanded. They're seeing more use of APIs and more digitization, the need of this digitization, right? And here is where I want to stop this recap on the modernization and invite Ignacio to explain, because what is really interesting and fascinated us at PCMI when we first discussed it with them at Hexi is that, as Fernanda briefly said, they are an AI-powered company, and the idea is like they are helping merchants, B2B companies, right? Specifically focus now in financial services, which called our attention because those guys, they are in the financial segment, so they know how to do that internally. But the thing is, like with Rexy and with this new solutions, they can be more efficient, they can reduce risk, they can reduce losses, and also human errors. Because instead of this mindset of they can do everything internally, they can have this support from companies such as Rexy to really leverage on data, on reconciliation, and really moving towards the digitization path. And now with AI, right? So Ignacio, if you wanna jump in and start and showing us your perspective on that, also your perspective on the treasury roles and needs. I mean, it's on you.
Sure. Thank you, Marina, and thank you to the PCMI team for having me today. It's definitely an honor for me to be here and talking about these problem spaces that basically are the reason why we started Rexy a couple years ago. So I think your point on treasury is exactly right, as we're seeing this trend of payments and routing getting proliferated, and how the treasury function is changing from just managing the cash onto now operating all these multiple payment flows and making sure that each one of these flows is correctly reconciled, accounted for, and that we're not missing any money, right? So I think as treasury is becoming more and more strategic, there's a missing layer underneath it for these teams to actually have the tools and the data, as you mentioned, to operate this in not only an efficient way with AI and newer technologies, but also in a safer way, right? I think adding multiple payment rails and adding multiple payment flows is definitely good for the business. It optimizes how you're moving money across borders, countries, and markets. But you need to make sure that whatever you're doing on that front is safe and is scalable and doesn't require you to hire more and more people, which again doesn't solve the problem and makes it more inefficient, but also it's prone to human error and losses. So I think the issue is no longer just moving money or connecting systems. APIs are helping with that. Orchestrators are helping with that. But once money starts moving across multiple rails, processors, banks, and ledgers, the real bottleneck becomes control, as I was saying. And that's the part I think is still underbuilt in this market, not only in Latin America, but also in the US, in Canada, in Europe, and in Asia. And so treasury can only become truly strategic if the underlying financial data is trustworthy and in real time. Because otherwise you're making decisions on fragmented systems that you don't know if they correctly reflect reality, that are delayed and that have disputed information, right? So the way we think about Rexy is we sit exactly in that gap. We're the control layer that turns fragmented money movement data into something that treasury, finance, and payment ops teams can actually trust and operate on. So just to land it a bit more on Rexy, we describe Rexy again as a financial control layer for companies that operate multiple and complex payment flows. And so we sit across the payment stack between processors, acquirers, PSPs, banks, ERPs, ledgers, and create a single source of operational truth, right? And I think the most important point here is where we operate in the value chain. If you look at the map PCMI just showed, a lot of innovation has gone into the front end of acceptance, routing, processing, and fraud, and that's all critical. But the second half of the value chain is less solved, for us to say, right? The reconciliation, the cash conversion, the real-time posting, the visibility that treasury, finance, and ops teams have over their operations, and how that data is audit proof, right? In many of these companies that have licenses and are regulated and need to comply by certain compliance mechanisms. So that's exactly where we live. And so the orchestrators help modernize how payments are accepted and routed. Rexy is helping modernize what happens after money is moved, right? And that's why this matters for treasury, but also for operations and finance more broadly. And so we're not another front end payment layer. We're more on the back end. We're the control layer underneath the operation. Just to mention a couple of the things we're building in terms of technology, of course, we're AI powered, and that not only means AI powered suggestions, but AI powered execution, and how that AI learns from your specific workflows and becomes really configurable and flexible to what your business needs. Because everyone here might know that reconciliation and in general, any workflow inside finance and operations is incredibly nuanced and it's incredibly specific. So that's why our technology is built so that it can adapt, it can absorb your complexity, and it can learn with your business over time. If you can please take me to the second slide, and please interrupt.
Nacho,
I
just want to make a quick comment if that's okay. Hi everyone. Lau, can we go back to the B2B flow map really quick? Because yes. So Nacho, what I think is this is a little bit different from other conversations that we usually have in our community, because you already said it, we usually talk about the front end, right? The actual payment, the actual service of providing payments. And in this B2B question, we're actually getting into the back of the house, and it's B2B payments are hard because we're actually talking about the operational layer of the business, and we're getting into business operations that is actually separate from the payments industry as a lot of us know it. So it's slightly new territory even for PCMI, which is why I'm thrilled you're here, and I think you're going to help connect the dots for a lot of our audience. And I love what you said. A lot of the complexity is being solved or has been solved by payment orchestrators at the front of the house, and you guys are sitting kind of like at this very first step as you get into the back of the house. And I mean, AI is something that everyone wants to understand at a deeper level. So I just wanted to, jump in and just, help the audience understand where this conversation is living in context of how PCMI usually talks about payments. And there's already some chatter in the chat that we'll get into, but I want to let you get through your presentation. So I just wanted to jump in.
Thank you, Lindsay, and it's a great clarification. Like, we don't handle money; we're a data orchestrator, and that's a key difference that's worth putting out there, because it acknowledges the historic evolution we've seen until today. Right, the last 10 years we've seen this incredible innovation in the payment layer, and now it's easier than ever, or there's a lot of solutions in the market for you to pay and get paid in any market and in any currency and in any way or form. But what we've not seen the past 10 years, and that's created a lot of risk, is this back office data orchestration layer where you can actually track and monitor all these payment flows we've been integrating and make sure that they're operated in a safe way. And just to mention an example of what can go wrong here, for those here that have been operating in the US market, I think the Synapse example is a perfect illustration of what can happen when all this complexity we've been building in the front end is not correctly accounted for in the back end. I mean, actual money can get lost, and that's user funds money, that's companies' money, and that's very hard to recover once the mess really pops out. So understanding Synapse as just the tip of the iceberg representing a systemic issue in the industry then makes us think, okay, now we need to start building in the infra layer to make sure we can keep up with that application layer innovation we've seen the past decade, right? So going back to the second slide here, and what Rexy does and why it's different, and the reason why it's resonating now is because the pain is operationally very tangible. I mean, every single bank, payment processor, insurance company, or even marketplace or retail company, or I can expand it to any company that has multiple payment flows and has a high transactional volume, is enduring pain with reconciling payments. And so what companies are dealing with today is not abstract. It's processor mismatches, it's settlement gaps, it's posting issues, it's chargebacks, exceptions, missing funds, teams that keep growing, and they're spending hours every week trying to figure out which number is actually right. And so what Rexy does is give companies three things. First, it's automated reconciliation across all of these flows, of course, AI powered. Second, it's real-time financial visibility across products, processors, banks, ERPs, and so that teams are not waiting until the end of the month to discover if something broke. And third, this is where we think the market is going, is agentic workflows on top of that reconciled layer. And so as we start thinking into how these finance and operations teams try to leverage AI to increase efficiency and go faster and take better decisions, everyone here knows that if we implement AI over a source of information that is not reconciled, then the AI is going to be executing stuff with the same level of precision and performance, right? And so we see this reconciled system of record as a foundational layer, so that then CFOs and COOs can build other agentic processes to automate different workflows inside their departments. That's the vision of Rexy sort of like going forward. So once the data is trusted, then you can start automating investigation, escalation, reporting, and most of the repetitive finance and ops work that many here are probably aware of. So that's the key idea for us. Reconciliation is just the starting point, but not the end point. The end point is building the system where finance and operations can increasingly run on trusted automation instead of fragmented manual work.
Ignacio, can I just interrupt you for a second? We have a question here in the chat that is how you can skip IT integration and how do you feed transactions into your system? And I would extend that just so you can talk about the size of your clients and how it differs on challenge or opportunities, what you're seeing.
So the first step of implementing Rexy is connecting to the different sources of information, right? And that means connecting to your bank, to your payment processor, to your internal ledger system, and to any provider with whom you're operating money, right? Because we need to get access to those raw files that today are being shared anyways in some way or form. Either it's API, SFTP, or just sharing PDFs over email or downloading CSVs from portals. We pick up that raw data and then start building the whole orchestration system on top of it. So that's the first step. And in terms of sizes of companies we work with, the cool thing about Rexy is that it's so easy to implement and to plug that we can work with merchants that are processing, 100 transactions a day, all the way to payment processors that are operating 50 million transactions a day. It's a very powerful orchestration architecture that enables us to basically work with whomever in the spectrum. Of course, our targeting is mostly focused on bigger companies, so banks, processors, insurance companies, and marketplaces, where, again, the multiple payment flows and the high transactional volume make this process specifically painful. Not only painful in terms of huge teams dedicating manual hours to the process, but also painful in terms of economic losses, like write-offs every single month of stuff you cannot reconcile, and regulatory risk of reports that you're missing, and then you're enduring on payment of fees, of commissions, or even the risk of losing an operating license.
Ignacio, let me ask you a question. You just mentioned a couple ways that companies share data, and I'd just love to hear your perspective. Are you guys working mostly in Latin America today, mostly in the US? Where is your primary marketplace? And if you could share a little bit, what's the level of maturity you see in Latin America, so far? Even you mentioned banks, fintechs. These are financial services. This is a financial service vertical that you're serving, marketplaces, digital payments. This is their bread and butter, and yet they still need help with reconciliation, which is a little bit counterintuitive, perhaps. So could you just talk about the level of maturity you see and what are the main challenges that your clients or the companies that you're going after are facing?
Sure. So the first question regarding our market, we're now serving both markets, Latin America and the US. I'm based in New York, actually, and one of my co-founders is based here with me. And then our third co-founder and the rest of the tech team is based down in Argentina and in South America. And in that way, we can serve basically any market in the Americas in general. Now, in terms of maturity, something that we've learned so far operating in the ecosystem is it's not very different in the US than in Latin America. I mean, one would think that in the US there's better technology and that these companies are more mature. But when you go deep down into understanding how these files are prepared, how they are built, and how they are shared, it's sort of the same thing. And that's what's interesting about our business. It can be global from day one. As a data orchestrator, I mean, there's only so many ways we can get access to the data. Either it's API, SFTP, building cron jobs to pick up CSVs from portals or PDFs from emails. It's the same thing everywhere. And then the cool thing about
interesting.
AI
That is surprising to hear. That's very interesting.
Yeah. And then the other cool thing about AI as a data orchestrator is, again, it's great at analyzing structured data. And so if that file comes from a processor in Asia or an acquirer in Mexico, again, it's structured data, transactional data, which what you need to do is just find the date, the amount, the settlement. There's it's not an infinite amount of columns and nomenclatures you bump into in this space. And AI is great at identifying those things. And again, it's the combination of AI plus human in the loop to build that optimized structure that enables these companies to track money flows in an automated manner.
And is there any particular reason that Rexy is focusing first on, financial services or payments companies rather than healthcare or manufacturing or, consumer goods? What is it that draws you guys to financial services specifically?
Well, first, in like financial services institutions are the ones with higher transactional volume where reconciliation is specifically complex. You did give some examples like healthcare or telecommunications, which also have a high transactional volume, and that's definitely some verticals which we will target in the future. But today, focus for us is the name of the game. Reconciliation is an incredibly nuanced space, and we want to make sure that in this initial phase of growth of Rexy, we build a product that's absolutely amazing and game changer for a specific industry, and then think about what's next, because it's not the same level of volume, of complexity to reconcile. And then the output schemes are also different. The output scheme that a bank needs in terms of reconciliation is different than what a healthcare provider might need in terms of reconciliation. And those are the benefits of, at least at the beginning, being vertically focused for us.
Got it.
And I'll add one more thing there. It's where we come from. So the founding team, we all come from operating fintech products and working in financial services in general, all the way from insurance, payments, and banking. And so it's the space we know the most and which we know we can build a solution that's definitely 10x better than whatever's out there. I think there was a question there in the chat about our competitors. Yeah. In the reconciliation space, there's a couple of solutions out there in the market. Some of them are more legacy solutions like Blackline, like Trintech, and then there's newer ones like Ledge, like Arkham, like Duco. In Latin America, a big one that has scaled a lot so far is Symmetric. I don't know if anyone knows them. And then afterwards, if someone's interested, please ping me. I'm happy to talk more about our differentiation and how our approach is different. But I don't want to be, I can speak hours and hours about this. I don't want to be concentrating all the session on that one. I think there's one more slide. And it's basically our role in the B2B payment evolution. And that's how I wanted to connect our view to the broader market evolution that PCMI was just describing, right? The first trend, at least in Latin America and the US as well, as we saw ACH gaining share in the payment market, is digitization. Payments are becoming more digital. I mean, the number of that's when the number of reconciliation services go up, right? Because digitization basically reduces paper, but increases operational complexity with data systems. And that's where our orchestrator becomes more and more relevant. The second is fragmentation, especially in Latin America, where you have a lot of countries, and so a lot of companies are forced to be multi-market from day one. And that means more rails, more providers, more currencies, and more local payment methods. That's why companies like dLocal or eBanks have definitely thrived in the region. That makes control much harder. And that's why orchestrators and aggregators came to existence. The third is treasury, how it's becoming more and more strategic, going from just managing the cash of the company into a payment ops role in which they need to make sure that whatever's coming in and out of the company is correctly accounted for. And again, these are not separate trends. These are consequences of a main trend that Marina was previously describing. And they all point to the same need, which is we need an operational and infrastructure backbone that gives these businesses trusted data in real time. And that's Rexi's role, right? We normalize this complexity. We create the reconciled system of record so that treasury, finance, and payment ops teams can adapt to this new reality, become more efficient, and most importantly, reduce risk of both economic losses and any sort of regulatory or compliance risk that they might face by not executing this workflow properly. So the companies that win won't just be the ones that move money well and quickly, but they'll be the ones that understand and control it in real time. Because we all know what can happen if you grow very quickly and you integrate multiple payment rails very quickly, and then at some point you crash into that complexity and lose some money. And I think every single company we've spoken with had some sort of traumatic event where they lost a lot of money, and that triggered some sort of control process to say, this cannot happen again. So with some of the companies we work with, is sort of like that preventive measure, particularly after Synapse. A lot of these companies are like, we don't want to be making the headlines like Synapse did. So let's make sure we build something with technology that is, in terms of hygiene, the best we can do to avoid having some sort of loss event in the future. Other than that, I'm happy to answer any questions.
I have a question, Ignacio. I think I kind of know the answer, but I just want you to elaborate on it. You know, in Latin America, especially Brazil, you know, we're living in PIX and real-time payments have gotten so much positive press, right? We know the very positive impact that new rails are having in the region. On financial inclusion, on digitization of cash, on competitiveness, on the industry getting access to a larger amount of flows. But of course, it also causes complexity. So can you speak a little bit more about that? And I think you're hitting on something really interesting. You know, when the more complex and more fragmentation we have in an ecosystem, the more challenging reconciliation becomes. So can you speak to that a little bit, maybe in a Brazilian context, or if you have any even examples or anecdotes? You know, I think that's really hitting on something really native to the region.
Yeah, I think PIX is amazing, and it's definitely a success case that now many countries in Latin America and in the US also, and in Asia, like I think PIX transcended the Americas, and it's now seen as a global success case of real-time payments that a lot of central banks out there are now trying to replicate. Of course, the success of PIX is not only the design, but also there's a lot of timing things that were going on in Brazil at that time that made it particularly successful. And it also has some specific things about how Brazilians operate their money, and there's cultural things embedded in these things, right? I'm sure a central bank in the US, for example, can push Fed now as sort of like the same solution, but culturally it may not gain the same level of adoption that it gained in Brazil, because again, there's a lot of cultural things in payments and how we manage money. But yeah, I think on the broader perspective of payment fragmentation, if you look at any tech industry, and there's a lot of examples about this, going back to like Intel and Apple or IBM and Apple, and every tech industry went in these pendulum phases of aggregation and then fragmentation. Fragmentation typically starts when some sort of technology opens the door to implementing new ways of operating something. I think .com and software in general was what pushed the fragmentation phase in fintech the past 10 or 15 years. And now we're going to start seeing this go back. We're already seeing it with the trend you guys mentioned of the payment orchestrators and the aggregators, but we're going to start to see it in the infrastructure layer as well, because that fragmentation, again, has generated a lot of risk. And now what should have been something easier, faster, or cheaper is creating cost on other sides because the infra layer did not advance in the same pace, right? And so I think we're going to start to see a lot of aggregation in financial services after this really acceleration in the app layer the past decade. And so in that sense, that's one of the biggest theses of Rexy, right? I mean, if you think about it, being an AI-powered data orchestrator, at some point it's try to aggregate all these fragmented systems into one so that we can continue evolving in the app layer, but with an infra layer that can actually operate it in a safer and scalable way.
You said something that really made me think, reminded me of, so one narrative or one talking point that comes to us quite a lot of PCMI is that in markets where there still is not a national real-time payment system, like Mexico, for example, which has RTGS and has fast payments, but it hasn't been built the same way, it hasn't scaled out the same way. Or maybe Central America, certain countries are good examples. There's this narrative that banks believe that by connecting to fast payment rails or connecting to multiple payment rails, they actually are at risk of losing customers, of losing deposits to fintech competitors. So I'm wondering if you guys, by helping small banks or less tech savvy financial institutions actually manage the risk of enabling more payment methods, are you able to help them possibly compete more and help them have an edge as payments will inevitably become faster and become multi-rail? Is that a narrative that you guys have? Do you see that as an opportunity for you guys?
Yeah, it's definitely a narrative. And I wrote an article about this in our blog, I think it was 1 or 2 weeks ago. I think it's actually on the flip side, and I'll tell you why.
Okay.
I have the thesis that traditional banks are going to close the gap with fintechs in the next 5 to 10 years. Because if you think about how did Nubank have a cost to serve that was a fraction of the cost of any traditional bank in the world, it was because of technology. They don't have branches and so on. Now, the reason for that existing is that Nubank had, first, the capital structure was VC backed, so they could be losing money for many years before actually proving a sustainable business model. And with that venture backable model, they were able to attract technical talent that were able to build software and technology for that, right? And which took time. Now, one of the things that's happening today with AI is that first, tech talent doesn't really matter much anymore, or at least someone which was not as good technically now has all the resources to be as good as a senior software engineer as before. And two, these systems that they were building are also very easy to build. So both tech talent and systems are not a competitive edge anymore. And so as Rexy will help these traditional banks accelerate their adoption to AI, it's going to be very interesting to see how these previously traditional banks now have cost to serve metrics very similar to Nubank, but with a lower cost of capital and with the distribution channels that make them a very solid financial institution, right? And so it's going to be very interesting to see how that competitive landscape evolves in the next few years, as these previously traditional banks are going to accelerate their tech adoption thanks to the democratization that AI is generating there. So I don't think the banks are worried in terms of us offering the solution, meaning now it's easier to operate these things and they're going to get their lunch eaten by these fintechs. I think it's the other way around. The banks are adopting us because they're going after the fintechs, now realizing that
Yes.
first,
Yeah.
the gap is too big to ignore, and second, the cost of bridging that gap is at historical lows, and it's going to continue to decrease.
I like what you said. You used a term, cost of service or cost of serving.
Cost to serve, yeah.
Cost to serve. Yeah, absolutely. And then that's a chronic challenge that banks have, right? So that makes total sense. Let's go ahead and I see Daniel, you're hiding very politely in the
Lynn,
chat there. You have quite a few
Lynn,
comments. Love to,
yeah.
yes.
No, I was just asking. Oh, I would ask Lau to move to the next slide. So while we were answering
Oh,
these
perfect.
questions, people can connect to Ignacio on LinkedIn. But yeah, sorry.
Yeah, so
Hello.
Danny, do you want to, I don't know which comment you want to come in with, but do you want to
Oh
share a little bit
gosh.
of your perspective from the UK or, where you're
Sure,
coming
sure,
from?
sure. Well, really, what you like. I don't want to hijack anything.
No, not at all, please.
Yeah. I mean, one of the things I think where I would start with this is that I think there is a lot more orchestration going on in the back end than has been suggested. For me, I think there is orchestration going along on with the sort of, particularly with the orchestration of liquidity,
Mm.
with the orchestration of permissions and risk, and increasingly with contracts. And I think actually, when you think about it, in terms of functional equivalence, systemic risk is a system level form of orchestration. The reason it's really obvious, I think, is because it is from a sort of what I call the Anglosphere perspective, where there's this kind of regulation bad thing, which sometimes is correct, but it's more that there are jurisdictions, and Brazil, by the way, is one of them, where there is a very, very strong guiding mind, which is not easy to argue with. And then there are other ones like India, where there's also a very strong guiding mind. But that just isn't the case in places like the US, in Canada, UK, South Africa less so nowadays, and previously Australia. But actually, when you find that your major modernization falls over because of that lack of a guiding mind, that's when the sort of Anglosphere finds that it has to really invest a bit more in the whole system capability. I mean, orchestration is great and it's a really good market solution, but the danger is because it is more of a it's a more commercially driven thing, that you're going to get almost like the cherry picking of orchestration problems. Now, what Rexy are doing here is really great, because in my own research, um, reconciliation, for example, in the UK, that is the number one problem for SMEs.
Mm.
It's the one thing they just do not have time doing it. I did research which showed that, people were spending like, 30 hours a month on reconciliations. Like, there's not an SME in the world that wants to spend their time doing that. So it's a great problem to solve, but solving that doesn't solve the whole thing, right? I guess that's the point that I'd make.
Mm.
So shifting of these things, I mean, you the market, the closer something is and more visible something is to the market, the more likely it is to get solved, because you can see the money, right? The thing that is really hard to get solved are the things that, like Nick was saying, back in the plumbing, right? Because they're not so visible until everyone's going, oh, that's really very slow. We can't really get the service out of the central infrastructure. But then it turns out that the model that you have for investing in the central structure relies on all the banks sort of saying, oh, well, we'll all just spend lots of money on something that isn't our problem right now, because that's just not going to happen. And that's where you come back to the guiding mind.
And by guiding mind, Anna, do you mean like a strong regulatory push?
It depends. Where you've
Okay.
got, for example, really collaborative cultures, right? That can be done quite effectively by the industry itself, in my experience.
Okay.
You'll see over in Japan, the Zengen system has just announced its like major modernization, and
Mhm.
the way they do things is that they get everyone together in a room with the Bank of Japan there to make sure everyone's behaving, and they have end user representatives, they have the banks, they have academics, you know, but they get together and then once they've sorted out the requirements, that gets handed over for delivery. That, by the way, is similar to what happened with PIX. The PIX forum, I think, is the real secret to it having worked, in my view.
Great. Thank you. Ignacio, any response or
I
I
was
see you guys
chatting.
having a little conversation, so
Yeah, I was chatting Danielle in the chat. I do agree 100% that reconciliation at its core is a coordination issue, and that it is mainly caused by lack of regulation. I mean, when you think about the regulated spaces, there isn't an issue with reconciliation because there's standards. There's standards on data sharing, there's standards on operating, there's standards on how these files are formatted and how they are shared, and how you're supposed to operate between banks, between insurance companies. Where it gets messy is one level above, on the abstraction layers of processing payments, acquirers, issuers, and all the fintech space, which are sitting on top of banks with these FBO structures, and they're doing and operating whatever they want. And that's how we end up with something like Synapse. Now, do we want regulation in the fintech space or not? That's a separate discussion. But Rexy is basically built to fill in that void. There's no rules of the game in fintech, and that's why it's a mess. And so we want to be that system of record doing all the parsing, like saying, hey, everyone dump the data in Rexy, and we're going to be the ones creating the standards. In fact, I'll put that out there. One of the things we ideated at the beginning was if doing Rexy open source, like publishing a standard on how Rexy should operate this data, and so then having all these abstraction layers of payments and fintech abiding by those standards, and so filling in that void with something that is open and to the community.
I'd like to jump in quickly and say that I made the comment that the plumbing is essential. Everyone wants to do the nice, flashy front end, but the money's in the plumbing. And you're right on the mark here with Rexy.
Thank you, Nick. Let's connect.
awesome. I just a question that Danny you made me think of. Ignacio, do you guys have in your vision serving small business? Do you see this being something that banks resell, or to get down to because I mean, when we talk about small business, that's like the top complaint that we talk about is reconciliation and helping small businesses access AI. I mean, there's many tools available to them, but there's so much confusion around which tool and how. And is that something you have in your roadmap?
Yeah, 100%. The thing is, we're still in an early stage tech startup, and so right now we're focusing on serving bigger institutions in which we can step in and really do a dramatical change in terms of economic impact and monetize that impact for us, right? At some point in the future, as we continue developing the product, once we feel it's a plug and play product, that the cost to serve is scalable for us to serve the SMB market, or B, we have distribution channels in which the customer acquisition cost to get those SMBs is low enough, then we would love to serve that segment, because again, we acknowledge it's a huge pain point there. But yeah, it's a focus thing. It's in the roadmap, just not today.
Got it. Excellent.
Great. So I guess, Lau, we can move to the next one. And I think Lindsay has some some thoughts to share.
Yeah, thanks, Fair, and everyone. Thank you very much. This is I love this topic, and I love doing a deep dive into Rexy to understand the options that companies have to solve this pain. You touched, Ignacio, on a couple things that helping companies get access to AI and AI for the purposes of reconciliation is a huge solve, because again, there's immense amount of confusion around how to use AI, where to access it, how to apply it, and how to do it easily when I don't fully understand it. So I love that you guys are moving in that direction. And then just opening up this conversation of the operational side of payments and financial services is a new frontier a little bit for the conversations that we often have. And I think it's absolutely at the core of helping financial institutions be more powerful in the marketplace and be more impactful and command greater market share at the end of the day in a multi-rail fragmenting payments ecosystem. So that's kind of my takeaways from hearing you, and I really appreciate you sharing your insight with us. This slide, if you all attended our webinar back in February, this was our our first framing of the strategic questions that companies face around B2B payment modernization. And in Latin America, I thought it was really interesting that you said Latin America and the US are really not that far off. And the question that comes to mind here is, which portion of the B2B value chain offers the fastest path to digitization, and where maybe as a provider do I have the right to lead? And so what you guys are doing, you're situating yourself right in that very first stage of, once we collect the money, now how do we convert that into cash, and how do we operationalize that in a strategic way to strengthen our position in the market? So maybe one answer to that question is, Rexy's already answering that for us, is in this reconciliation phase, and making that data smart is possibly one potential answer to this question. And then for all of you who are on the line, thinking about this strategically, are you trying to own, are you a financial institution and you're owning that these flows, you're owning this corporate customer? Are you a SaaS or enabler who are enabling these flows? Or are you the corporate yourself and are receiving the service, and your goal here is to actually optimize my solution here? And so these are just some of the possible actions that you might take. And where I think, Rexy, you guys are sitting is really in this enable column, providing multi-rail reconciliation, being a pioneer in automation and AI-driven treasury. This is, I think, where you guys are sitting, but you're also sitting in the own category, because you're actually going direct to financial service providers as folks who need SaaS solutions. So it's just an interesting model. And if you guys click ahead, this is an area where PCMI is actively learning and guiding companies. B2B very much is almost in a way, the last or the next frontier of payments innovation, because consumer has already received so much attention, investment, and has successfully digitized in a large way. And so moving to that next stage of digitization is where there's a lot of attention and investment being poured into. And so we're actively helping clients understand, how do you help banks, and how do you help banks help their customers in this data focused industry, bringing in AI and adapting to a fast fractionalized payments ecosystem. So just kind of wanted to end our conversation with this strategic look, and hopefully these questions or these strategic options are helpful for you in thinking, how do I take this information and bring it back into my business?
Can I add to that?
Please.
There's been a lot of push in the last few years for the banking industry and payment industry to adopt AI, and Visa is a large part of that, of really encouraging it. Recently, banks are suddenly getting scared because of what it could mean. And so they're backing away, which is good. because at the end of the day, the banks are in the business of security, and anything that even suggests a danger to security, they should be running a mile. However, controlled AI within a specific field, which is measurable, which has limits, that's where there's an opportunity where the banks are actually going to be a lot more comfortable going in that direction, purely because it doesn't open the door to anything. It has a very controlled use case. And again, I think that you're on, Ignacio, you're on the right path here of a very focused use of AI for a very specific purpose that benefits banks and others. But the banks are going to like that because of that limitation on AI while providing the power of AI.
That's a great point, Nick. I actually like that a lot. Yeah.
Yeah, and Lindsay, if I just may add to what Nick said, it totally correlates with Nubank mindset, right? If you see Cristiana Junqueira talking about AI, and this is exactly, Nick, what she says, that banks prefer to avoid and run away, but Nubank is positioned differently because they know, I mean, they're not using openness, but for a specific use case and learning how to use and how to leverage AI, because this is the game changer. This is what they're leveraging on to go now to US and so on. So this is also connected to how Ignacio is doing at Hexi and how I believe like Nubank model is going to, which is different from the traditional banks and the open-ended use of AI.
I hear you all, but I think I may pick a fight with Nick on this one though, because he's laughing now. Because I don't think I don't think banks are going to be able to keep AI in a box in the same way, and that is because it's what I call the Ian Malcolm problem from Jurassic Park. Life will find a way, and here this is for me. If you I've started hearing this horrible word vibe coding, right? And you've got everyone in like accounts receivable is getting their hands on smart contracts and all this sort of thing. And I don't know, this feels to me like giving toddlers machine guns.
All right.
Okay, so we are almost at the time. I just want to have this time to thank you all for joining. Thank you, Rexy, Ignacio, Carolina. It was an amazing session, amazing presentation. Thank you, Marina, too, for helping with the discussion. And I hope to see you all next month. And Lau, if you can click on the next slide. Last time we didn't have the time to go through this, but I want to remind you that we do have a LinkedIn group. If you're not there and you want to connect, please just scan the QR code because we share what is coming up. We can also like talk and share some insights, ideas there. So please join. And next month we will be covering the emergent acceptance of I'm sorry, just bit I just completely messed here, but we're talking about the emergence of new acceptance ecosystems. And I hope to see you all there.
Thanks, everyone. See you next
Thank you,
time.
team.
Thank you, Rexy.
Bye.
Thank you,
Thank you.
Ignacio.
Have a great
Bye.
day, everyone. Thank you. Bye.